I'm excited to have Patrick Sagisi here today from Ocario Ventures. He's a subject matter expert in energy and sustainability technology. Patrick, how are you doing today?
Doing great. As you can tell, we have a nice, it's not actually this clear out. It's back in San Francisco Bay, but I like to think of it that way. How are things up where you are in Sacramento?
Hey, pretty good. Speaking of Northern California, just doing a little bit of history on your background, undergrad at Cal and then graduate program at Stanford. So you're battling it out. I guess when the big game comes along,
It's not just a house divided. It's it's me divided.
Oh, that's great. And then your office now is in San Francisco, right? You're still in the Northern
Well,
California.
it's in Acario's head. Yeah, I mean, live up here in Oakland. Our head office for Acario is in Menlo Park, actually not too far from SRI and the area. So not too far from Stanford.
Awesome. Let's talk a little bit about you and I first met in the Kauffman Fellows program. We both had great experiences going through
Yeah,
that program. Can you talk a little bit about kind of your journey from that program to where you're at now with Ocario Ventures?
sure. Well, I feel very fortunate. I didn't start out growing up wanting to be a VC, but it's sort of having gone to Stanford Business School during the dot-com boom and being exposed and working in the tech industry, it sort of grew on me. And it was through the Kauffman Fellows program that I finally got an opportunity to sort of go from the operations side into the investing side. It was hard. It took a while. I applied to what was then the finalist program back in 2003, got a little bit along, didn't make it in, applied again in 2008, got accepted as a finalist. I was still working at Samsung in Korea at the time, and I tried to do a search for a VC job in the Valley from Seoul. And even with all my connections and everything, it took a while. It didn't work. Came back, spent another year doing a full-time consulting and job search, and ultimately did land at DBL Investors in 2011 as they were closing up their fund too. So I have and then took another couple of years to convince the firm to let me go through the program as a Kauffman Fellow. But all in all, it's the way I got into VC. It was an amazing learning and co-learning experience because, as you know, it's not just about the materials they teach you, which isn't that much, but your cohort and the co-learning that you do with a great bunch of people who are all going through the same thing you are, and who are all in this very small and highly curated community that's part of the venture capital community, if anything else. And so even post that, it's been a great experience, the continual learning and support, because it's not an easy job, the one we're in, actually. So from there, so yeah, Kauffman has been amazing, and it's continued to pay dividends, both through conversations like meeting awesome people like you, deal flow, sharing between each other. Like I gave one of my Kauffman classmates, we turned down a deal in a company called Good Eggs, actually, which is now pretty big. It's in Northern California here at grocery delivery. I handed it off to one of my Kauffman classmates, and it was a fit for him and his firm. And that was his first deal that he ever did. So things happen, and just the continual exposure and learning to everything. So it's been a pretty integral part of my career, even post DBL and going forward.
I think the more that we all share information about things like, the stage of investment sectors that we're interested in, some of the personal passions, the more that we sort of share those between each other as Kauffman Fellows or co-investors, or, we work a lot with corporate venture groups, we start to understand how we're relevant to each other. In the spirit of that, maybe you could talk a little bit about Ocario Ventures and sort of your focus by stage and by industry sector. I know I've read a lot about mobility and electrification and, looking at what you're doing in the transportation space. I would imagine, electric vehicles are a big part of what you're looking at. Certainly there's sort of the grid 2.0 and some of the things that, you're looking at there. Maybe talk a little bit about sort of stage of investment and industry sector.
Sure. Just a bit of background. So Acario is the corporate venture and open innovation arm of Tokyo Gas Corp in Tokyo, Japan. So Tokyo Gas is this big energy company that services the metropolitan area, Tokyo regions. Think of like SoCal Gas, but servicing the greater LA region. And a few years ago, it's been around. It's not even a 20th century utility. It's a 19th century utility founded in like the 1880s. So it's built up a rather large $18 billion business, importing LNG into Japan and then distributing that. But also in the more recent years has seen deregulation happen, has seen the power business open up, and is also starting to think, like many other energy companies, how do we make this energy transition to a decarbonized world and still stay relevant? And as part of that, about 2.5 years ago, they set up Ocario Innovation here in Silicon Valley to tap into the new energy economy in the States, to do two things. One is sort of business development efforts and getting proof of concept trials of new technologies into existing business units. And then they also set up a venture arm, Ocario Ventures, which I run, which is looking forward at the horizon 2, 3, or if you want to think about a time frame, 3, 5, 7, 10 years out, what are the new technologies and markets that open up in the energy sector that we want to be part of as we go through this transition? How do we help lead and guide Tokyo Gas from being a gas-based utility into a new 21st century energy company? Kind of the same journey that Shell and others are trying to go on, and it's not an easy one. So we're not a GPLP fund. We're not exactly a captive corporate fund either. We have sort of an allocation from headquarters in the CTO's office. It's not quite set every year, but you can think of it on the order of $10 million a year to invest in early stage companies. And how we define that is post-product early revenue. So the nomenclature on deals has changed a lot. There's like pre-seed, seed, ABC, but we're looking for things that have been productized, that are starting to get into the market, and where we can come in and invest $500,000 to $2 or $3 million as a first investment into the company with follow-ons for later rounds and all, to see and go on this learning journey with the companies. How do we, as they hopefully grow and become the market leaders here in their sector in the US energy space, but in 4 or 5 years, hopefully they'll become the Lego building bricks of a new P&L or business for us in Japan over that time. And we've gone on this learning journey with them so we can learn how to do it. It's not like a pure commercial relationship, but we've built the internal capabilities to do so. So sector is sort of early stage technology company, post-product, early revenue. Geographies, North America, US and Canada. I told you the amount. And then also sectors, you mentioned all of them and you've done your research really well, but things related to decarbonization, which we define as how do you take a huge gas infrastructure and gas utility that's now a power utility as well and turn it into something, meet our climate goals and everybody's climate goals so we don't bake the planet. That includes hydrogen and new potential energy sources as well, including distribution and renewables. The second is all the grid 2.0 stuff. So the grid, as you know, is moving from this sort of centralized generation hub and spoke model to something that looks like the internet, a network of networks with a lot of wind and solar and batteries and renewables on it, dynamic pricing, dynamic loads, and how do we be a part of that? The third is an interesting one. You mentioned mobility. So yes, we service the greater Tokyo metropolitan area and they have great public transport there, but one of the interesting trends that's happening now that everybody sees very clearly, especially here in California, is the electrification of transport. And just speaking from and that represents this transition of moving things and people around cities and electrifying that is the biggest new source of step function revenue for any power utility, I think, over the next 10 years. As a personal example, my commute from the beautiful Oakland Hills down to Menlo Park 4 days a week used to cost me about $350 a month in gas costs at the pump. But then we got an EV, right? And so, sorry, Chevron, Shell, 76, Valero, that $350 a month at the pump I spent has gone away. But I charged that EV at home. And now my power bill has gone up by 50+%, by $150+ bucks a month. So net in the fuel, I'm better. I'm helping the planet by driving an EV, but like net, I'm better. But my power company is like, hey, your bill just went up 50% because you got an EV. We love that. All that money's, this transfer of wealth is happening. And then the fourth area or sector that we look at is what we call sort of it's called now Industry 4.0. So the digitization of heavy industry and operations. So how do you apply machine learning and AI and all kinds of other things, the IT revolution, to making business operations more productive, especially for big heavy industry operational things, but also products and services for our customers, because ultimately we're in a deregulated market. We've managed over the last 3 years to steal about 2 million customers from TEPCO, Tokyo Electric Power, and become our power business. We've also lost several 100,000 customers to other new entrants into them. So we can't just be providers of gas and electrons, which are ultimately commodities. We have to move up the stack in providing more energy related services and other things to our customer base so we can keep them. And also, as the gas revenue goes down over the next decade and into the 2030s and 40s, replace those billions of dollars with other things. So that was a long explanation, but that's sort of who we are and what we do, and we're very happy to be active.
As electricity becomes a new fuel, it's just a fascinating area. Whole bunch of opportunities for innovation. Let's talk about your due diligence process, and I'd be interested. Ocario Innovations and Ocario Ventures, are they collaborating on due diligence? How do those two sort of business units, if you will, collaborate together? And maybe talk through your typical due diligence process, whether you're looking at investment or whether maybe you're doing something on behalf of Tokyo Gas as it relates to an acquisition. Talk a little bit about the due diligence process.
Yeah, every corporate venture group is different. A lot of it reflects their parent company's sort of priorities. For us, we work really closely with the sort of business development, open innovation side, and part of it's by stage. Their mandate is sort of things that we can deploy in 0 to 3 years in an existing business unit. And as you know, from AVC, we see thousands of opportunities here, both from all the accelerators we're part of, our own relationships, our co-investors and other deals. And so not all of those are in the investment sweet spot for us in terms of stage and sector and all. Some of them might be too late or too growth stage, but they're ready to deploy. So we hand them off to the business unit division where, gosh, we have this new technology for managing pipelines or reducing emissions or something that's deployable now. And in the same token, they'll see things that are too early for them, but in our investment sweet spot. And so we'll pass things back and forth. In terms of a process, so we work closely with them as well as, and they're also the bridge back to the headquarters businesses. In terms of a process, I spent 8 years at an institutional VC firm. And I learned a lot as well through Kaufman about what to do and not do. So our process that I follow is pretty much the same as any other institutional VC. We're looking for companies that have the potential to be market makers and drive large, substantial cash on cash returns because they'll be the market leaders, because they've got the best technology and team and they're in the right place in the market and the value chain and all the other things. So we look at all of those things with the added layer of and the reason we do that and bring that financial and venture rigor to that is because we want to be involved in the companies that matter because by definition, if you've done that and it has a chance to be the 5, 10 plus X return in the market leader, these are the companies that are going to matter and therefore will have the most strategic impact, which is sort of the second lens, sort of co-equal. How does this fit into the helping transform the business along the roadmap and timeline that we've laid out with the parent company? So again, our fellow Kaufman classmate Betty Yang over at 500 Startups did a great study of like, what are the different kinds of CVCs and how do they do this? And they're all along a spectrum, purely strategic, purely financial, independent, some less independent. We're sort of in the middle and evolving because we're a young organization, but bringing the regular institutional VC rigor to that process is very important. And so we do a lot of the same things. And ultimately, we also have to find not a strategic rationale justification, because these are by definition new unknown areas for the company, but to know that they're on the roadmap and that they fit into the roadmap of helping transform Tokyo Gas for the future.
Corporate venture groups seem to be working hard to figure out ways to sort of access the innovations that are relevant to their industry, access interesting deal flow. And a big part of that is communicating to the entrepreneurial community sort of value post-investment. Sort of, can you talk a little bit about your view on how you can add value to an entrepreneur or to a startup company post investment? How you leverage your expertise, your network of relationships, and your experience to do that?
Yeah, I think there's sort of a twofold answer to that question. One is, how do I, Patrick, personally do that based upon my experience or reputation and network to help people with the usual things of hiring, being a good sounding board strategic advisor to the companies that we invest in. Even if we're not on the board, we want to be really active in helping the entrepreneur, because as VCs are, I was a swimmer and an athlete, but at some point you transition to trying to be a good coach to people based upon your experience. And so I've tried to bring that same mindset of, I had P&Ls, I did product operations, product launches. the whole gamut of things in my corporate career, and I'm trying to be the best coach and mentor and helper, because we are ultimately, venture is ultimately a service industry to the entrepreneurs. At least that's one of the values they try to inculcate to us, with us within the Kaufman program. And so how can I be the best helper to the CEOs we invest with and partner through my networks? But also on the corporation side, traditionally big companies have brought market access. They, where appropriate, can bring technology and validation that other, early market access, proof of concept trials, helping validate something in a market, and in our case, in another geography as well, to the extent that we can help do that. We have deep pockets and we have channels. So for the appropriate products, we have, a multi-dozen million person customer base, and, that we can help try launching things into. But it really depends. Again, I think it's very important that, because there's a lot of money sloshing around still in the ecosystem, and there are a lot of people and a lot of players going after not so many really good teams and good ideas. So the question is, I always used to ask this when I was at DBL, and why should we have a seat at the table? And try to figure that answer out for ourselves, as well as to help the entrepreneur figure that out, so that we could win a spot in a deal. And I don't think it's changed all that much going from the institutional to the corporate side either. Do you find that?
I think that it's similar. I think that corporate venture groups are starting to act a lot more like the traditional VC firms, and instead of waiting for a Series C or a Series D round of financing and playing a bit of a passive role as almost strategic or industry endorsement for the company, they're now getting involved in Series A, Series B deals, and I think as part of that, some of them are taking board seats, and they're sort of stepping up and trying to figure out ways to provide value. To your point, pilot projects, access to customers, access to market insight, certainly capital, certainly coaching. And so there's a lot of value that these corporate venture groups can bring. In your sector of sort of energy and sustainability, we're looking at how artificial intelligence applies to markets, and sort of looking at where AI is playing a particularly innovative role. Are there areas, trends that you see within sort of the, I guess, clean tech area broadly, energy and sustainability, and some of the other areas that you're focused on, where you see a real opportunity for artificial intelligence to sort of, be applied to, markets that you're focused on?
The short answer is yes. I will upfront caveat that by saying not every energy company or large industry is able to make use of it yet. There's been a lot of talk. A couple of years ago, there was like, the Internet of Things is coming and it's going to be huge, and it's here now. Actually, we're deploying lots of, the industry, not necessarily our parent company, are deploying lots of smart sensors, getting a lot more data information, and also on the personnel side, facing the loss of a lot of older employees, and that the skills and the knowledge that was in people's head about how networks and these operations are running. So I think it's even more important now, as people are trying to make things more efficient and optimized, to make use of the tools that are at hand that have been and bring them over from the IT industry as well. So in general, yes. And just as a quick example, these are not my companies, unfortunately, but there's a company called Urban, which is basically, it's in the Northeast, it's in New York. They have like up to 8 or 9 or 10 of the largest 10 gas utilities. They use AI, they use the company's data, and they also scrape public data to figure out, help companies improve gas safety and all. So things like the San Bruno explosion or the explosions in Brooklyn, all of gas mains won't happen because they've looked at the public records, and guess what? This landlord hasn't paid their tax bill for like the last 2 years, and they're not keeping up. And so, hey, flag that as a risk, get a crew out there. Or how do you avoid cross borders? So that's something you couldn't do with people very well, but it's something that machines and AI can do, and looking at the patterns in the data to help prioritize and identify areas of both improvement as well as safety. You're seeing that a lot in the energy industry as well, in things like wind farms and weather and solar, and trying to optimize the production of those assets based upon forecasts, more intelligent forecasts of weather and other systems and things. And so, and then as you get to a grid distribution system that's a network of networks. Well, we've seen how AI and machine learning and network traffic is managed not by people, but the computers themselves and the algorithms. And so energy is moving that way. It's not here yet, but certainly there are a lot of opportunities available. And certainly for you all at your firm, I think there's the adoption's a little slower sometimes. Utilities are not fast movers, but it's coming and it's happening, and we see it more and more and more every day. The other thing that's going to drive it too is this, again, vehicle electrification and all these dynamic loads on the grid. Like, you don't want to be blowing out your transmission and distribution grid because 5 people have plugged in their EVs and they're pulling down a megawatt on a little feeder circuit that's more than the poor little transformer on the telephone pole can take. You have to dynamically manage those loads and smart loads. And all of this is important because ultimately we all need to decarbonize so we don't cook the planet. And so being more intelligent about how we use things like energy is something that the algorithms can do better than we can.
We've had some success at collaborating with corporates that are a lot of other industry sectors, but not yet found sort of some key partners in the energy sustainability clean tech space. I mean, we've co-invested now alongside of Intel and Baidu and Yamaha and Kubota and SK Hynix and Goldman Sachs and a number of other corporates. So we've had extraordinary success at collaborating with corporates and co-investing with them in our portfolio companies. As we look to collaborate with groups like Ocario Ventures in the clean tech space, who's playing a thought leadership role in energy and sustainability, how do you find yourself collaborating with the traditional VC community?
A lot of it is actually, it's funny to say this because it's been around a long time and VC is greatly expanded. It's not, the stereotypical 1960s, 5 firms on Sand Hill Road and 10 firms, 4 firms in Boston. But a lot of it still comes down to personal relationships and this sort of network of knowledge and trust to help capital formation. Kaufman Network's one example, but people I've been on boards with, people that I've co-invested with before. You find out who, it helps you match who can bring the best resources to bear to help the particular company that's involved. And a lot of that is still tied up in personal networks. And so the short answer to your question is, having been in the industry and having worked with a lot of people, those personal connections still are a source of deal flow, a source of resources if we need to hire people, not just with them, but with the service providers as well. I think, the stereotype was, which I'm trying to avoid greatly based upon my prior experience in helping grow this new entity for Tokyo Gas, which is Ocario, is the stereotype of the corporate investors. They're here and they're gone. They're there for one deal, they're gone. They're never, corporate strategy changes and all of a sudden we need to be good citizens in the community by acting as good citizens in the community, being there for the entrepreneurs over time, over multiple rounds, being there for the other investors. And that takes time to do. So I guess the answer to your question is being involved with traditional VCs means acting like a good investor and a good steward and a good partner over time to build that credibility in the market. Because otherwise, capital is hundreds of billions of dollars have gone into funds of all kinds over the last several years. We all see the NBCA and the PitchBook numbers. And what differentiates that? The entrepreneur actually has a good chance to decide who's going to be their partner at the table with them to go forward and build the company. And so we have to build a good reputation as corporates to be good partners, and that takes time to do. Sorry, there's not a more succinct answer to that other than showing up and doing the good job day after day after day, but that's what it takes.
Helpful. It makes a lot of sense. It resonates with me. It absolutely makes a lot of sense. I think that there's a sort of, social capital and goodwill that you sort of, build up and a rapport that you build up with others. And I think that there's in an age where there's so much innovation happening in so many different industry sectors, it's important to know who are the go-to people in each of these industry sectors, who are the subject matter experts in those areas. And oftentimes, even within energy and sustainability, I'm sure sometimes you feel like a bit of a generalist, reaching out to different people. And I can tell you, when you're focused on AI and it applies to so many different places, you recognize you cannot become a technical expert in all these different areas. It's better to understand who's got, a wealth of knowledge there. And to your point, it ends up giving you an excuse to reach out to old friends and others that you respect and that you want to collaborate with. And so, yeah, your logic makes great sense to me. Let me shift gears and ask you,
Sure.
question about sort of professional development. And what I find is that, you've gone from sort of athlete to stellar academic career to venture capitalist to corporate venture, right? And so is there, from a professional development standpoint, as you look at your career now, are there certain things, certain routines that you find yourself sort of adopting to elevate your game as a professional and make sure that you're staying, that you have accessibility to new trends, new innovations, that you're on the cutting edge?
Yeah. As you said earlier, there's just so much data and information, so many new things happening. Part of our, it literally is in the consulting is like you can drink from the fire hose and boil the ocean all day long and not learn anything. I think, and part of this business is also one thing that helps with our experience as we grow older and have done more things is sort of pattern matching and recognition. Not that reasoning by analogy is always correct, but at least you can start seeing things. So this is a wonderful job for me as a technologist, as like electrical engineering background, material science background, and other things, because I never stop learning. There's always new things to learn, and I can geek out on whatever I want, and I can talk to the most intelligent subject matter experts, i.e. the entrepreneurs, about something new that could change the world, and try and help them decide if it's a good investment. Not only that, but help them to crystallize their thoughts and thinking and help them on a path forward by being part of their, by investing in them and working with them. But you never stop learning. Hate to plug Kaufman again, but you want to, all the modules and events that we have for the co-learning opportunities, sharing between people in the network is incredible. It's a lot of time. I think also the other thing that I would say is they're great opportunities to continue to learn when you look at the interfaces between things. So you talked a little bit like the interface between machine learning, AI, and the energy sector, which has been slow to adopt. Things between, vehicular transportation and energy and carbon and other things. And so I've always found throughout my long career that the most interesting things were happening at the intersection of sectors and technology. And that's where the new things are being created. Mm-hmm. But it's a never-ending job of learning, and you can't really keep up with it all. I think the best you can do is try to keep a pulse on the sector areas that you're most involved in. And, we'll take quarter-long deep dives on different sectors, and that's a good way to sort of provide some structure around it. And then as part of our education process back to our corporate headquarters, like right now we're looking at, what are the different, we're trying to help crystallize a more solid, what it should be the 30-year, 20-year decarbonization strategy for Tokyo Gas, and what are the technologies available now? What parts of the market should we be in as an investor, what as a partner, and over what time frame? And it's a good part of our own development of a thesis around where to invest, but it's a good way to like take a deep dive into different sectors and markets. And we try to do that sort of on a quarterly basis as well. It's hard too, because you're always meeting new people and you get dragged in a million different directions. The best description of, I think, a VC job that I heard was from one of our former summer interns at my old firm. It's like, after 12, he's like, I figured out what it is that you guys do. Basically, it's institutionalized ADHD. Because we were a generalist firm and I covered like space technologies, consumer, retail, med tech, and depending on what was happening in the portfolio companies or new ones that were coming that we were investigating, it was like jump. And so you've got to really take some time, and I try to take Fridays and sort of take some time to synthesize what I've learned and also outline where it is that I need to be focusing time. And you need that because there's always so much going on and so much you could be doing. I think for anybody, both in this job and any job, it should take a little break to organize yourself and to just reprioritize things and also figure out what you can do. You can't do everything, but maybe, and this is the fun part about this job, along the course of the year, there's some key moments where you can help change the trajectory of a company or an entrepreneur, or even an industry. And so you be prepared for them by not running yourself too ragged and taking the time to like know when they're there by being aware. Does that make sense?
Yeah, it makes a lot of sense. It sounds like you take Fridays to sort of recap the week and allow yourself to get immersed in what you learned and what happened, during the week. Is there anything on the personal front? I'm always fascinated by people's sort of morning routines. Is there anything on the personal front that you do to sort of kickstart your day? You know, I'm a big sort of proactive living kind of guy. I
Yeah.
have strategic plans for life and sort of
You can look at your backboard and see that.
exactly trying to put up the family dream board and try and keep myself focused on, you know, things professionally that I'm trying to accomplish personally with family. And certainly Kaufman has enlightened me with regard to structure and certain things that you can put in place. So as the Entrepreneurs Organization, there's some colleagues that I have there that have provided some interesting ideas. How do you sort of start your day, kickstart your day to make sure that you're bringing a, you know, an abundance mindset, you know, an optimistic mindset, because we're working in a pretty sort of challenging area, a risky area. And to your point, you can get overwhelmed with data, you know, many days. How do you ensure you stay focused on the things that really matter and sort of bring your A game every day?
Yeah. Well, we have a 8-year-old rising third grader at home, so that actually takes up most of my free time. But I would say, you know, my life now is not as structured as it used to be. Back when I was in college and still competing, life was easy. You know, you had workout in the pool 4 hours a day, in the gym another hour and a half, and your life was built around that. But that was, you know, more than 25 years and about 30 pounds ago. Now, I think, but to the point, I think it's really important for people to have some kind of physical activity to clear them out. You know, I was able to be a double major in engineering and be on the swim team because I had I had the energy to study. They sort of fed off of each other, and I had energy to do one because I did the other. And people need to find whatever it is in their life, the balance of physical activity. I know a lot of people who meditate. For me personally, we live next to a big regional park, so you know it's good to go for hikes and all. You have to build in the time, and I'm as guilty as anyone else, especially in these COVID times of lockdown, that of not keeping to a schedule. But find times to take care of your physical conditioning so you can be on your mental game can be sharp, and just build that in. And also find time. I mean, one of the pluses of this COVID time and this lockdown going on 4+ months is we spent a lot of time with our young son who's not going to be young for much longer, and we get to appreciate that part of his childhood and not miss it by being on a plane in Boston or somewhere.
Yeah.
But I think people, especially this time, you know, our friend Brad Feld talked about, you know, there's an economic crisis, there's a health crisis, there's also a mental crisis. You need to take care of each of those things within yourself to make sure that you're balanced and can be as effective and perform at the high level that you aspire to do. That hasn't changed from being an athlete, actually. You know, you have to eat well, take care of yourself, get enough sleep so you can perform, and train so you can perform. That still applies, and it's harder to do now, but it still applies.
It's definitely harder to do. And there's the, you know, it's sort of, you'd think that it would be easier if we're all working from home and have a little bit more control over our schedule. We're supposed to be able to have a greater level of insight as to what's good for us physically, you know, mentally, socially, you know, all of these spiritually, all of these things. Hey, last question for you, because I know we've got to wrap up. I sort of, as you look at access points to ideas or education, are there any sort of blogs or publications or, you know, other sort of, you know, TED Talks, you know, is there anything else that you consistently listen to? I'm getting a bit burnt out on the 24-hour news cycle, regardless of which channel you're watching. And it's just sort of, it feels like it inundated with to some degree negative news that is destructive to some degree. And I'm constantly thirsty for sort of new avenues of content. I think many people are. What is there anything on a recurring basis that you listen to or watch?
I'm more of like a grazer. I mean, we won't have buffets anymore. Well, I like to like graze and try a lot of different things at the buffet. But I will say, you know, it starts, one thing is go for a walk in nature. I live next to a big regional park in the hills, and like 10-15 minutes, my commute instead of the hour and a half drive to Peninsula is now like a 10 or 15 minute. My wife goes on this loop walk every morning in the redwoods and oaks, and it's a good way to center and start the day. In terms of like knowledge, I subscribe to a whole bunch of probably the same newsletters that everyone else does with like TechCrunch and Pittsburgh and all. And I would say that for me, like 20-minute VC is a good thing. You know, Harry Stebbins has gotten really famous. I like listening to things by the Long Now Foundation because it provides that long-term view, like society over the course of centuries, combined with the usual tech stuff. And I think you just sort of have to find what works for you. And things come in and out too. Like there will be times when I love listening to things like Stanford Business School's leadership, the people who are significant thought leaders. So you brought up TED. TED's kind of the archetype of that, but of organizations that I'm connected to. And frankly, we're really lucky to get a weekly email from Kaufman or listening like different podcasts and different things that people have been on or speaking. But just, it's hard to curate it, as you said. I think things come in and out as they're needed, but I try to stay abreast technically of what's happening in the different areas that we're focused on and just learn from lots of different people's experiences. I don't have a better answer than that for you, but because it changes, but I think as we deal with all of these different things in a world that's changing really dynamically, feeding your brain, it's like your diet, right? You shouldn't be you shouldn't have a monoculture diet. You should be eating lots of fruits and vegetables, lots of leafy greens, some protein of some kind, lots of, do that with your learning. And for me, somehow, on Friday after I've like done with things and looking at the schedule for the next week, also trying like, what are the connections that suddenly pop into my head because I've listened to a bunch of different things as I'm on a walk in the woods. That's what works for me, at least.
Patrick, today was educational and inspiring for me. I really appreciate your time and the opportunity to get to know you a little bit better, get to know what you're working on and in the sort of the corporate venture world and the industry sectors that you're focused on, and then some of your personal professional habits. I'm going to be replaying this and taking notes and then adopting some of the things that I heard today. Thanks so much for the time. I really appreciate it.
Thank you. It's been wonderful, and it's always great to see you. And I really appreciate the opportunity, and hopefully, share some things that will help people optimize and improve their own lives and performance. I will say though, free advice is worth what you pay for it.
All right, that's a wrap.
Okay, thank you.
Patrick, I don't think. Hey, Pat, is there anything else that you wanted us to cover? Let's see if Pat's still there.
I think he's on mute, but you feel free to edit that down. I know we went over time a little bit, but that's fine.
You know what? If we need to, we will. But I actually, that was great, Patrick.
Thank you.
Yeah, I really appreciate it. I thought that you have a way of communicating where you're threading in either personal experiences or business experiences that I think provide the next level of granularity as opposed to question answer. So this particular interview is going to be very well received, I think. By the audiences out there. And I learned a little bit more I thought I knew a lot about your background and a lot about, what you're doing and how you're interacting with Tokyo Gas and some of the other sectors that you're focused on. But I learned a lot even in today's call. So that, part of I love doing things where there's 3 or 4 or 5 positive byproducts. And I think we got that today.
Good.
Yeah.
It was a lot of fun.
All right. Have a great day.